Morning traders, Paul here with GammaEdge. Today is Thursday, the 27th of July. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, we've got a mixed market model. The short-term timers, which are comprised of the CT, the cumulative tick, and the railroad track pattern, which you'll see on the next slide, have moved marginally lower. This gives us a mixed picture on the CT, but the railroad track pattern has moved up. So when you get this kind of divergence, you'll see it's very weak. You have to pull out your magnifying glass to really see it. Long-term market model, which is appropriate for the longer-term position traders or longer-term swing traders, remains in an uptrend. So we have another continuation day up. So overall, we are consolidating in a longer-term bull cycle. The TLDR, if you don't want to go any further here, we remain slightly bullish. We're close to neutral. 4,600 is clearly in the upside crosshairs. There's no question about that. 4,500 is now minus GEX in the combo complex, and we believe this move upward of minus GEX is due to short-term positioning for any potential downside movement. Could have been yesterday, could be taken off today, and that could have implications. The PM complex, we are call delta dominated above and below spot, so this is bullish overall. We closed right at transition, which was at 45.55, maybe just slightly a strike or two above. This too starts the day slightly bullish, which is good. Very, very tight transition. We do expect lower volatility. The combo complex, which is the AM and the PMs, transitions 45.45, minus trans is 45.20. This has not changed all week. We're slightly above this, and again, we can take this as slightly bullish. So we have this bias going on, which is just slightly on the bullish to neutral side. Note, as I said above, minus GEX has shifted up to 4,500, which is short-term positioning to the downside. When we see these calls move up, Gamma is time dependent, and we had a huge growth of the 4,500 line up from a much lower level, and what that effectively does is position folks for taking advantage of any short-term downtrend. Now that's good. You might think of this as worrisome. When we see liquidity being added right underneath us, that is healthy, that is a normal market, and if we do go in the money on those puts, we'll most likely see some monetization, and that will just be possibly the start of a next wave upward. We are called delta dominated above and below spot, which much like the PM complex means that we've got good runways, good bull support. We're not collapsing right now. Overnight parking potential, I won't read all of these. There are a couple that I am watching pretty carefully here today, though. 45.80 and 4,600 are the two that I tend to like. I don't think we're going to go below the 45.20, but if we do go below 45.20, we certainly do want to pay attention to that, because that will empower the bears, and it'll weaken the bulls a dramatic amount. Zero DT, folks, plus trans at 45.65, minus trans at 45.60. Remember, we closed at 45.66, so we're right at this level. We start the day in this neutral position, and so we can break either way. It's a very tight transition. When we see the tightness like this, the market is well defined, and we're not actually expecting a lot of fireworks at all today, independent of all the news that's coming up. Plus GEX 45.80, minus GEX 45.50. Create your if-thens on this. I've done it here in green and red. I won't go through all of them. You can pause and read these. Like I said, a drop below the 45.20 shifts the sentiment towards the bears. And if you're in the Discord, certainly want you to watch both the value and the Val-D commands. That'll give us some indication of what's being targeted for the day. When we take a look at the cumulative tick, you can see here over on the very, very right that we came right up underneath where the line would be on the previous close. If you look at what the machine said, the machine says we closed slightly below. So as far as the machine is concerned and the back testing and all of that, it was effectively turning off the cumulative ticks. But since we're so close, we can break either way. Now just below that is the ribbon. The railroad track pattern, and it actually is indicating a bullish pattern where they're all spread out. And if we do continue to advance upward today, any buying we'll start to see the railroad track spread apart and become effectively railroad tracks to the upside. And so this would be good, and you could probably play in advance new trigger day in the overall structure for the market model. Now, Because of the ribbon, the colorful ribbon, the red and the cyan and all the colors in the middle there, because it is still in an uptrend, it is a continuation day, but it's a weaker continuation day with the failure of the short-term indicator. So just be aware of that. We're in a longer-term bull cycle with short-term consolidation and pullback. Now, the closer and closer we get to this ribbon, the more we could fail. No question about that. And this is not a predictive model. It is driving with the rear view mirror. So what that means is that although we don't know what the market is going to do from this alone today, it does give us a very good indication of what it has been doing and what potentially the momentum could be to the upside or to a break to the downside. Taking a look at the gamma here. Really the takeaway, we got a tight transition. That's the blue box in the middle. We're above that. You can see the 4600. The green dot on the left-hand side is plus GEX, and the green dot on the right in the call column is the call open interest for the PM complex. They're coincident, 4600. This is very, very powerful. And just be aware the magnitude of the gamma line is very, very strong. Above us, we have green deltas all the way up to the JPM end of September strike. We have 39,000 short calls sitting up there, and that's why gamma and delta are negative up there. It's not liquid, but it is influential. And then down below spot price, which is the yellow bar, you can also see that we have green all the way on down. This is a overall supportive environment for the SPX, and we do think that until we start seeing evidence of put speculation down below us, that our bias remains to the upside. 0 DTE. Positive expiry today, which is a call-dominated expiry. As long as we remain above the 45-65 zone, we should have support from the decaying puts below us. And if we can make progress up towards that 45-80 zone, we'll grab more and more calls that will go in the money, and that should be supportive. If we get above the 45.80, obviously you can see what's going to happen, and that'll push us upward towards that 4600. Now, to the downside, 45.50 is your line in the sand. If we lose the 45.60 lower transition and push down and don't hold around that 45.50, 45.44 area or 45.45 area, we do see a capture, and when this occurs in the day is going to be important. If it occurs earlier in the day, we think there's a possibility that we could reverse, especially with the euro close, and push upward. But if it happens in the afternoon, we think things could put downward pressure on the market. So just make sure you develop your if-thens and can go accordingly. The 1 DTE, we're at the top of transition, as you can see, and you can see very, very clearly for Friday. We've got 4600 clearly indicated as coincident at plus GEX, as well as the 1 DTE COI. That's a very, very important level. Very strong expiry tomorrow, over 578,000 contracts coming off. So clearly you can draw your lines in the sand, and you know where we have to be in order to participate to the upside tomorrow. To the downside, 4,500 is indicated. You can see that too is a dominant level. It's minus GEX on the 1 DTE. Taking a look at the combo complex here, 4,600 to the upside, very, very strong. Obviously intermediate, 45.75, and then to the downside, you see that red dot sitting next to 4,500. That is minus GEX for the combo complex. This is a big deal because this is where everybody's concentrated right now. That has moved up, and it's a very strong gamma number. So minus 16,000 GEX exposure is significant. We want to pay attention to that. We have a significant amount of out-of-the-money calls above us. We have also a very significant amount of in-the-money calls below us. So we are in a positive gamma, positive delta environment. This is good from our side of the table. We think it's constructive, but it does not mean we can't pull back. If we do pull back, your if-thens should be looking at that 45, 45, 45, 50 zone as a first holding period. If we do not hold that, then look for that 45, 20 area. If we don't hold that, then of course 4,500 is going to get tested, and that could shift sentiment. And what that means is that we could empower the bears to start opening puts, and the calls above us could start to close as those call holders, especially the short-dated call holders in the 0 and the 1 DTE, start to panic. close those positions, and that could lead to further downside. So your lines in the sand are very well clearly defined, and you should develop your if-thens based upon what we see here. This other picture here shows this very, very clearly. You can see 4,500 to the downside, 4,600 to the upside, 4,525 is that line in the sand. Below that, sentiment changes pretty dramatically. 4,545, if we can stay above that, we probably will retain a bullish tint to our trading, and we'll be looking opportunistically at 46, 47, and all the way up there at 5,000. So with that, I will bid you farewell. If you're interested in this, come on in to GammaEdge.us. Upper right-hand corner of that web page, there's a pricing tab. Click on it, fill out the blanks, come on in. 14-day free trial, all the tools turned on, no risk to you. Twitter or X or whatever you want to call it, GammaEdges with an S. And then here on YouTube, two things. First thing, give us a thumbs up. Gives me immediate feedback that you like the content that you're getting here and it's actionable and it's interesting. Of course, if you subscribe, you'll get notified, and that will help you plan your day when you get the information. Now, if you want the information before the open, join, because we delay the postings on Twitter, we delay the postings on YouTube. Members get all of this before the open, and so they're able to plan their day, and they also get a pre-market briefing when personnel are available to do that. So with that, bid you farewell. Make it a great Thursday. Hope to see you in the Discord. Thanks.